Okay, you've given us quite a stack of sources here. It covers, well, just about everything, doesn't it?
It really does. You've got global conflicts, political moves, company stories, even, how you might pay for a trip to the zoo.
Exactly. From the Middle East affecting markets to, yeah, summer fun pricing and biotech breakthroughs, some wild stock market stuff too.
It paints a picture, definitely. Shows how these different threads, they're all connected. International policy hits stock prices, tech changes industries.
Right. So our mission here with this deep dive is to wade through all this, pull out the key insights, maybe some surprising bits, and just help you cut through all that noise.
Get you informed quickly on a lot of different things.
That's the plan. So let's dive in. Where should we start?
Well, I think we have to start with the big picture stuff, the geopolitics. It's really setting a tense mood in the markets right now.
You're right. The sources really highlight that escalating situation in the Middle East. We saw President Trump leaving the G7 summit early because of it.
And the reaction was pretty swift. He posted on social media, didn't he? Urging people to evacuate Tehran.
Yeah, everyone should immediately evacuate Tehran. And a very direct statement, too. Iran cannot have a nuclear weapon. Very strong words.
And the G7 leaders, they also responded. They had a joint statement.
hmm Affirming support for Israel, calling Iran a, quote, principal source of regional instability and terror, and, calling for de-escalation, including a Gaza ceasefire.
And you can see how sensitive the markets are to this. Stock futures were down Tuesday morning after the news broke.
Even though Monday was actually a positive day for markets, right?
Right.
Despite the tension sort of brewing.
Exactly. But oil prices, they definitely reacted Tuesday. WTI crude up 2%, Brent crude up 2.2%. That's often a direct signal, concerns about supply when there's conflict in that region.
And analysts are weighing in. JP Morgan suggested some market sectors might see consolidation now.
Right, the ones that haven't already. But it's interesting, LPL Financial looked back historically.
Oh, yeah. What do they find?
They looked at 25 geopolitical shocks since 1941, and they found stocks tend to be pretty resilient, actually. The average drawdown was only about 4.6% over, say, 19 days or so.
That's surprising resilience.
Yeah.
But how does this feed back into, say, the Fed's thinking?
Well, that's key. A former Powell advisor apparently called the Middle East situation a major wild card for the Fed.
Why a wild card?
Because if this leads to a big jump in oil prices, creates a lot of uncertainty, it could actually tip the economy towards a slowdown. Makes the Fed's job, navigating inflation and employment even tougher.
Okay, so from global conflict, let's shift to global trade. Tariffs, trade deals. President Trump's really emphasizing these. We saw that U.S.-UK agreement signed at the G7.
Yeah, it seems like a step towards something bigger, maybe a more formal deal down the line. It lowers tariffs on some UK imports.
The sources mentioned specifics, right? Like cars.
Right. A quota for 100,000 UK cars per year at a 10% tariff, which is much lower than the 25% others face. And tariffs on UK aerospace parts were eliminated completely.
But steel wasn't resolved in this particular deal.
Seems like it. The sources mention steel is still kind of hanging out there, even though lowering those tariffs was part of the overall aim mentioned.
It's fascinating how the sources talk about the personal element here. President Trump's comments about the UK and Prime Minister Starmer.
Yeah, that quote was something else. When asked about protecting the UK from more tariffs, he said, because I like them. That's their ultimate protection.
Wow. Not your typical trade negotiation language.
Not at all. And Vice President Vance had said something similar before, right? That a deal was coming because the president really loves the United Kingdom, citing cultural affinity. It adds a very unusual dimension.
So what about the economic impact? Different views there, too. Northwestern Mutual apparently worried investors are underestimating the risks from tariffs.
Right. The risk to the economy.
Yeah.
But the Trump administration's view, or at least the view presented in the sources, is different. They see tariffs as a way to, bring manufacturing back, help workers, and even raise revenue for tax cuts.
And this focus on domestic stuff, it goes beyond trade deals. There's this new bipartisan bill targeting foreign ownership of U.S. farmland.
A FIDA Improvements Act, yeah. Specifically looking at China.
The numbers are pretty significant. Chinese investors holding over 277,000 acres at the end of last year.
And total foreign ownership is, what, over 45 million acres? It's huge. Half the states already have limits, but this bill aims to strengthen the federal side, address some weaknesses the GAO found.
And we see the real-world impact of just the uncertainty around tariffs. Look at Gap.
Yeah, that's a direct hit. They reported decent earnings, but then mentioned a potential $100 to $150 million cost just from tariff uncertainty.
And their stock dropped 15% because of it. even with good earnings otherwise.
Shows how much that uncertainty weighs on businesses.
And sticking with domestic policy for a sec, there's this internal GOP friction over the SALT deduction cap, that $10,000 limit.
Right, the state and local tax deduction.
Yeah. Apparently, disagreement on whether to keep that cap could actually threaten a potential Trump tax bill down the road. It's amazing how these details can become major political hurdles.
Absolutely. Okay, let's talk about the Federal Reserve. Interest rates. The market seems pretty convinced about what's happening this Wednesday.
Yeah, almost certain they'll hold rates steady. CME FedWatch says, 98.7% probability?
Pretty much baked in, but there's definite pressure coming from the White House to cut.
Oh, yeah. President Trump, Vice President Vance, they've been very critical. Vance called current policy monetary malpractice.
Strong words. But Fed Chair Powell, he's been consistent, hasn't he? Saying the Fed's not in a hurry, they're watching the data, focused on that dual mandate jobs and stable prices.
And inflation's still above their 2% target, even though it's come down.
Exactly. And those tariffs we just talked about, they add another wrinkle, potential for higher consumer prices, which works against the Fed's goal.
So what are the expectations for cuts later this year?
Well, July looks unlikely still. Only about a 23% chance according to the CME tool. September seems like the first real possibility in the market's view.
A cut in September.
Yeah, about a 58.7% chance of a small cut. 25 basis points, a quarter of a percent.
Okay, let's shift gears completely now. Let's talk companies, industries. Starting with semiconductors and AI, that world is just, well, on fire. AMD had a big jump recently.
9% in a day, yeah. Driven by excitement around their new AI chips, the Instinct MI350 series.
And it's not just AMD, is it? Chip stocks overall are doing well.
Right, the PHLX semiconductor index, that's up around 6% this year, doubling the S&P 500's performance. It's all about that AI demand.
Analysts seem bullish too. Bernstein likes NVIDIA, Broadcom, saying AI demand has legs.
Yeah, they point to big tech spending, but also this idea of sovereign AI countries wanting to build their own AI capabilities. That creates even more demand for the hardware.
And speaking of government interest, OpenAI just landed a big contract with the Defense Department.
$200 million. For prototyping AI for national security uses, warfighting, administration, that kind of thing.
It's their first big public DoD contract, part of this OpenAI for Government initiative they're pushing.
And Sam Altman said they're proud to engage in national security, but it's worth keeping perspective.
How so?
Well, $200 million is big, but OpenAI's total annualized sales are reportedly over $10 billion. So it's a piece, but not huge in that context. And other AI companies are working with defense too, like Anduril, Anthropic.
Plus, Microsoft's Azure OpenAI service already has clearance for classified data.
Exactly. The government is definitely exploring AI across multiple platforms. It's not just one company.
We saw a fund manager, Patrick Kelly from Elder Funds, calling AI the greatest theme of our time.
Thinks investors are still underestimating it.
His point was focus on execution, right? Which companies are actually delivering in this space?
Makes sense. Okay, let's move over to health and biotech. Big news from Eli Lilly. An acquisition.
Yeah, buying Verve Therapeutics, a gene-editing startup, for up to $1.3 billion. That price, $10.50 a share, was a huge premium, wasn't it?
Massive, 67.5% premium. Verve stock soared 80% in pre-market trading on that news.
Wow. So what does Verve actually do?
They're working on gene-editing therapies, targeting specific genes like PCSK9 and ANGPTL3 that regulate cholesterol levels.
So for Lilly, this is about expanding beyond their weight loss drugs.
Exactly. Diversifying their portfolio, moving into cutting-edge gene editing. They already had a partnership with Verve, so this deepens that bet.
Another health tech company making moves, Sword Health. They just raised more money.
$40 million. Puts their valuation at $4 billion. And they're expanding from digital physical therapy into mental health with a new offering called Mind.
And Mind uses AI, but also hardware and real therapists.
Right. A wristband tracks heart rate, sleep. But the CEO stressed the AI assists clinicians. It doesn't make the decisions, aiming for more immediate help with things like anxiety.
Seems like the digital health space might be picking up again after COVID.
Yeah, seeing signs of recovery. Other companies like Omada Health, Hinge Health also making moves recently.
Then there's the 23andMe situation. Quite a turn of events there.
Really is. The co-founder, Ann Wojcicki, actually won the bid to buy the company out of bankruptcy through her nonprofit.
Outbidding Regeneron, right, for $305 million.
Yeah. And the terms are really focused on privacy. Operating as a nonprofit, strict rules about data deletion, opting out of research, no selling data unless a new owner agrees to the same rules.
Plus a privacy advisory board, reports to AG's, free credit monitoring.
It's a lot.
Hmm.
And Wabachiki had stepped down as CEO specifically so she could make this bid, really highlights the sensitivity around genetic data.
Got it. And just a quick note, Kraft Heinz is apparently removing artificial dyes in the U.S. Not many details in the sources, but worth mentioning.
Okay, shifting again, let's look at the consumer. Gap, that's a turnaround story.
It really seems like it. Sixth straight quarter of same-store sales growth, 5% in Q1. That's huge for them.
Especially considering, they closed 2,000 stores, sales plummeted billions, past turnaround attempts just didn't work, inventory issues, too many promotions.
So what changed? New leadership.
Seems key. CEO Richard Dixon, who gets credit for the Barbie revival at Mattel. And hiring Zach Posen, focusing him on Old Navy.
And Old Navy is crucial, right? Over half their revenue.
Absolutely. It drove their overall growth last year, and they did it with their best gross margins in 20 years. The strategy was apparently shrink first, close stores, layoffs, simplify the products, improve quality, build a solid foundation.
But not everything's fixed. Banana Republic and Athleta still struggling a bit.
Yeah, sources say they lack that consistent growth Old Navy is showing. Still work to do there.
Okay, different kind of consumer spending, travel. Capital One's opening a big new airport lounge at JFK.
Their biggest one yet, 13,500 square feet in Terminal 4, opening June 19th. And it's open 2047.
Access depends on your card, right?
Yeah. Venture X gets unlimited free access with guests. Venture and Spark Miles cardholders pay $45, others $90. Need a same-day boarding pass, of course.
And they're trying to give it a local flavor. New York-specific stuff.
Right. Partnerships with local breweries, coffee roasters, bakeries. They even have this in-lounge bodega concept with essay bagels and bean coffee. Plus, grab-and-go, full bar, showers, the usual lounge perks.
This feels like part of that trend with premium credit cards getting fancier and more expensive.
Definitely seems that way. The sources mentioned speculation that the Amex Platinum fee could go up to $1,000 after its next revamp. It's currently $695.
In Chase Sapphire Reserve already went up to $795.
Exactly. They add benefits like these lounges, but the cost gets passed on.
Another trend impacting summer plans, dynamic pricing. Zoos, museums, aquariums doing this more.
Yeah, about 17% using variable pricing, 6% using true dynamic pricing where prices change based on demand, weather, things like that.
So you might pay less booking ahead or going off-peak, but more during busy times or last minute.
Right. And the reason, money, basically. Attendance hasn't fully recovered post-COVID for many places, so they need revenue. No margin, no mission, as one CEO put it.
But it could annoy visitors, right? If the price feels too high for the experience. And sometimes it's hard to see the final price up front.
That's the risk. But attractions seem keen on it. A survey found 16% are prioritizing dynamic pricing for the next couple of years.
Sources did mention ways to save, though: library passes, bundles, bank programs, military discounts.
Worth looking into if you're planning a visit.
Okay, now for something completely different. Trump Mobile and the T1 smartphone.
A new venture from the Trump Organization, yeah. A mobile plan, the 47 plan, for $47.45 a month. Unlimited everything, plus roadside assistance, telehealth.
And a $499 smartphone. Gold-colored, flag-etching, Make America Great Again marketing.
But the sources make it clear this is mostly a licensing deal. The Trump Organization isn't actually making the phones or running the network themselves.
And that monthly price? $47.45. It's higher than competitors like Visible or Mint Mobile.
Yeah, significantly higher. They claim the same coverage as the big carriers and U.S.-based customer service, though they don't say where that service is based.
What about the phone itself? The built in the United States claim.
That's drawing skepticism. Experts from IDC, Counterpoint Research, they say it's almost certainly made in China by what's called an ODM, an original device manufacturer.
So a company makes it, Trump Mobile puts their brand on it?
Essentially, these experts say it's completely impossible. It was designed from scratch or fully made in the U.S. The supply chains for components like screens and processors are global, mostly Asia, and the U.S. just doesn't have that large-scale phone manufacturing capability right now.
And the $499 price point probably reflects that too, compared to, say, a top-end iPhone.
Right. An iPhone 16 Pro Max is expected to start around $1,200. Different scale of manufacturing and components.
All right, let's wrap up with a few quick market movers mentioned in the sources. Solar stocks took a hit recently.
Big dip for Sunrun, SolarEdge, Enphase, First Solar. The trigger was a Senate Republican proposal in their budget bill.
What was the proposal?
To phase out the wind and solar tax credits completely by 2028, while keeping incentives longer for nuclear, hydro, geothermal. Those credits from the Inflation Reduction Act are really important for Seoul economics.
And they want to pass this bill quickly, before July 4th. And it includes raising the debt limit, too.
Yeah, raises the debt limit to $5 trillion. So it's a big bill with major implications. On the flip side, defense stocks got a boost Tuesday morning.
Makes sense given the Middle East tensions we talked about earlier. Lockheed, Northrop Grumman up in pre-market.
Also, SoftBank sold a big chunk of T-Mobile stock, $4.8 billion worth.
But they're still a major shareholder.
Yeah, still the second largest, even after selling 21.5 million shares. They sold at a slight discount, $224 per share.
And Citi has a bearish call on gold, forecasting a potential 25% drop next year.
That's pretty bold considering gold's recent record run. Driven by central bank buying and investors seeking safety, Citi thinks that might reverse.
EchoStar stock sounds like it's been wild. Down on bankruptcy fears, then up sharply.
Yeah, real roller coaster. Felon reports they might file Chapter 11 to protect licenses from the FCC, then soared on reports President Trump intervened, urging the FCC chair to make a deal.
Wow. And finally, this Regencell Bioscience story. It's just incredible.
Isn't it? Hong Kong-based, early stage, zero revenue. Stock triples Monday, up 46,000% year to date. Market cap near $30 billion after a stock split.
For a company developing traditional Chinese medicine for ADHDism based on a proprietary theory.
Right, the Sikkeo TCM brain theory. Sources emphasize no regulatory approvals, no patents, no distribution. They mention one small patient study showing some improvement.
But that valuation, it's drawing comparisons to meme stocks, right, like AMTD Digital. Social media skepticism is high.
Extremely high. Someone apparently nominated it for #complete Bullsh Company of the Year. It really stands out as an example of, well, pure market speculation right now, disconnected from fundamentals.
So we've really covered a lot of ground, from, serious global conflict and trade policy down to specific companies trying to innovate or turn around.
Got consumer trends, travel perks, dynamic pricing, and even these really speculative corners of the market.
Taking this kind of deep dive, you really start to see how it all connects, don't you? How these different pieces fit into the bigger picture of the economy and, well, just the world right now.
Absolutely. It helps you connect the dots. And, thinking about a story like Gap's turnaround strategy, execution, hard work versus this Regencell surge based on, well, who knows what, really, just speculation. It really makes you think, doesn't it? In today's market, with information moving so fast, how do we tell the difference between real fundamental value and just market hype? That's something worth mulling over.